Folks, today we're going to talk about a new report from Redfin, which is showing that U.S. real estate investors continue to run from this housing market. The investor purchases, they collapsed yet again, especially in Florida. And this data is showing you just how dire the situation is getting in the U.S. housing market. It's really on its last legs right now because take a look at this data from Redfin, everyone. U.S. investor home purchases fell 6% in the second quarter, the biggest decline since 2023. Now, these investor purchases in the housing market have been declining for the last 3 years. However, they continue to drop. You can see the home purchases by investors dropped by as much as 21% in Fort Lauderdale. They dropped by 25% in Orlando, and they dropped by 19% in Phoenix. And so these investors continue to not buy homes, and now they're even starting to sell homes. And one has to wonder, what is this investor exodus going to do to home prices over the next couple of years? Because after all, these investors were propping up the housing market for a decade. They were buying all these homes with cheap debt for much of the 2010s and during the pandemic. They caused the prices to go up. Now they're no longer buying. What's going to happen to prices with these investors no longer buying? Well, just take a look at how much the investor demand has actually dropped in certain markets, everyone. I mean, this is shocking data that I don't think a lot of people are talking about. You can see here on this table, we're looking at all the different markets from Redfin's data and the ones with the biggest drop in investor purchases. Atlanta is number one. And I'm actually going to find a way to zoom in on this for you guys because this data is absolutely wild, absolutely crazy. So in Atlanta, there's been a 75% drop in investor purchases. In Charlotte, there's been a 70% drop. In Phoenix, there's been a 69% drop. In Jacksonville, 67% decline. In Orlando, 62% decline. I mean, folks, take a look at Orlando. The investor demand went from up here to down here, lowest level in a decade. In Tampa, it went from up here to down here, lowest level in a decade. In Atlanta, it was at 13,000 home purchases in the third quarter of 2021. Now we're at 3,000 home purchases. Just take a look at this graph. In case you're bullish on the housing market, everyone, in case you think prices aren't going to drop, just take a look at this graph of investor purchases in Atlanta. The investors are running scared from the housing market right now, and it's depriving the market of a key source of demand that was pushing prices up during the pandemic. So interestingly, I'm live right now. We actually have some comments already coming through in the chat section, everyone. I'm going to actually take a look at some of these comments. If you guys want to leave a request, you want to leave some zip codes for me to cover in the future here in this video, please do so. We have one person talking about how inflation is going through the roof. What makes you think home prices will fall? Inflation is going through the roof. What makes you think home prices will fall? Well, everyone, home prices is very simple. You know, we here at Reventure App, we have a very simple model for understanding home prices. I'm going to actually share that with you right now. What actually causes home prices to drop? Well, I'm going to use Florida as an example. How much are prices going to drop in Florida in the future? Well, let's start by looking at inventory. You know, that one commenter was saying inflation is up. Well, in Florida, there's 175,000 homes on the market for sale. The long-term average is 114,000 homes on the market for sale. So when you see inventory up 55% from the long-term norm, that's why prices are going to drop. You can see in Florida, we have a minus 6.4% forecast, and this is one of the markets where the investors were buying. They're no longer buying. The inventory is way up, and the home sales in Florida have plummeted to the lowest level in 12 years. Now, that's just one example. I think a lot of you know that Florida is in a housing market correction. But what about California? I know a lot of you out there are in California. In California, the home buyer demand, according to this data on Reventure App, sourced from Redfin, has dropped by 35% over the last 4 years. Take a look at how much the buyer demand has dropped. So for the people out there who are thinking that prices won't drop because of inflation, just look at the supply and demand fundamentals in your market. Is demand down 35%? If it's down 35% and inventory is way up, that means prices are more likely to drop. And sure enough, everyone, home values are already dropping. In California, they're down 1.2% over the last year. In Texas, they're down 2.3%. In Florida, they're down 4.7%. And the investor is no longer buying homes. This is going to perpetuate the downturn, right? The investor is no longer buying. They're going from buyers to net sellers in many of these markets. And I actually just found a house on the market on the south side of Atlanta being sold by an investor for less than $200,000. I'm going to show you this house here right now because this is absolutely crazy. South of Atlanta is like one of the biggest investor havens in the US. And I just found this 3-bed, 2-bath house today on Zillow, 1,300 square feet, listed for $198,000. Let's take a look at the pictures. I mean, I'm not going to say it's the greatest house in the world, but it looks livable. It looks like it might have been renovated in the last 5 years. On the market for $198,000. I don't think some of you realize actually how much the prices are dropping in certain markets. This was a house that the investor purchased for $226,000 in December 2024. Now they've cut it by about 15% in just 9 months. The investors are selling, everyone, in markets like Atlanta. They're selling in markets like Orlando. They're selling in markets like Phoenix. And this is causing the prices to drop. Let's see if we have any other comments here in the chat section. Get your requests in, everyone. Get your requests in. Let's see. Donovan says investors are older and they have to cash out at some point. New investors have to weigh the risks compared to something like SLV or GLD. Is GLD gold? Real estate investment is special. You know, I think that's a great point. There's 24 million investor-owned homes in America. 24 million homes are owned by investors who don't live in the house. That's about a quarter of all the housing units in the US. So it's a very high share, a very high concentration of the housing stock in the US that's owned by investors. So what happens to the housing market if investors have stopped buying, they've clearly stopped buying and start selling? That could cause a perpetual decline in home values in certain markets. And a lot of investors are older. They own multiple properties, and it's not so hard for them to sell a couple. And by some investors selling a couple properties, you get a big inventory spike. And one market I just really want to focus on for you guys right now is Atlanta. You could see Atlanta, we had the big spike in investor purchases. Now we're at the lowest level of investor purchases in 10 years. So Atlanta investor purchases are down 74%. What about Vegas? Vegas investor purchases are down by about 60%. And this data comes from Redfin, everyone. They're reporting on the big decline in investor demand in the market. You know, you got to wonder if you're in Vegas and you're looking at buying a house. 3 years ago, you were competing with all these investors. Now you're no longer competing with these investors. In a market like Tampa, the investor purchases are way down. So let's just take a look at inventory, right? So I think some of you might be thinking, okay, investors are no longer buying. Like, what does that mean for me actually? Well, I'm going to show you just how much inventory is skyrocketing, right? So we just mentioned how investors are no longer buying in Tampa, right? So just to refresh your memory here, investor purchases went from 5,500 in Tampa in the third quarter of 2021 to only 2,200, lowest level in a decade. Well, what has that done to the market in Tampa? There's now 20,000 homes for sale in the Tampa metro, the highest level of inventory in a decade. So this is kind of the inverse relationship. When investor purchases plummet, what then happens to inventory? Inventory explodes. When inventory explodes, what then happens to prices? Values in Tampa St. Pete are down 5.6% already in the last 12 months. Reventure app one-year forecast says values are going to drop 8.4% over the next 12 months. And so, you know, I know a lot of you out there, you seem to be thinking that this downturn isn't happening. It is happening, especially in Florida, especially in Texas, especially in Tennessee, Georgia, Phoenix, Las Vegas, even in California, it's now happening. But, you know, one thing that's starting to occur that's causing some people to think, oh, the downturn is going to stop, is the Fed rate cuts. The Fed looks poised to cut interest rates in September in just like a week or two. Some people are even saying we're going to get a double rate cut from the Fed, a double rate cut, potentially a 50 basis point rate cut. And the mortgage rates are dropping already, everyone. I mean, the 30-year fixed mortgage rate just dropped to its lowest level in 11 months. Mortgage rates dropped to 11-month low. So the mortgage rates are declining. The interest rates on the long end of the curve are dropping, and the Fed is anticipated to cut 2 to 3 times by the end of the year. That's now pushed the 30-year fixed mortgage rate down to 6.28%. 6.28%, lowest mortgage rates in 11 months. Now, the question here is, what are these mortgage rates going to do to home buyer demand and investor demand? Are these mortgage rates going to bring buyers back into the housing market? I mean, you guys can let me know what you think. Are these mortgage rates going to bring buyer demand back into the market? The thing to understand is that the buyer demand is already at a very low level. So, we talked about how the investor purchases are down. The investor purchases are down as much as 70% in Atlanta from peak. They're down 50% on a national basis in the US from peak. The mortgage applications from regular home buyers are also plummeting. So this is the mortgage applications for regular home buyers. They've plummeted down to the lowest level, close to on record. Mortgage applications to buy a house are down 35% from pre-pandemic levels. So we have investors out. We have regular home buyers out. Who's going to support the market? Who's going to stop prices from falling? Especially with a labor market that's now weakening. I mean, the job market, it's not yet in the tank, but it's getting there. Non-farm payroll growth is basically flat. Americans' perspectives on how easy it is to find a job are at the worst level in 12 to 13 years. So even if mortgage rates drop to the low sixes, are people going to buy a $500,000 house and take a $3,500 a month mortgage with them feeling insecure about their job? I mean, you guys can let me know in the comment section. Yeah, actually, so one of you actually just said this. Hard to qualify for a loan when no one has a job. The best cities for houses are places with poor job opportunities. That's actually a great point. The best places to buy a house right now are areas that are not as economically vibrant because they're more affordable. We have another person here commenting, Sean. He's a top agent in the US, top real estate agent. He says housing market is dead right now. It's bad. We have another commenter, Steve, saying condos are down 15 to 18% in Delray Beach. Is this a good time to invest? I mean, a lot of you are coming up with some great comments here. Let's talk about Delray Beach in Florida for a second, though, because I think this is an interesting market. I don't know if some of you know just like how much prices have dropped in Florida. Like, you want me to show you just how much prices have dropped in Florida? I just did a live stream in Miami on my other YouTube channel earlier today. And we were looking at how much the values have gone down just in Southeast Florida. And up in Pompano Beach, near Fort Lauderdale, values are down 12.7% in the last year already, right? And there's this perception like Southeast Florida isn't going down. Oh, Southeast Florida is holding on. No, folks. Southeast Florida is now in correction mode. This was, again, a big market for investors, all across the Palm Beach, Fort Lauderdale, Miami area. We have values already dropping by a significant amount, and the investors are a big reason why. Let's see. What else are people saying here in the comment section? Mark has a great point and actually explains why investors are no longer buying. He says, invest if it pencils out. Invest if it pencils out. And this is ultimately the main reason why investors are no longer purchasing homes. It doesn't pencil out to be an investor in this market, at least not yet. The prices haven't come down enough to incentivize investors to get back in the market, because it's kind of a simple calculation if you're an investor out there, or if you're an aspiring investor. This is the calculation you should do. What's the rent, monthly rent? What's the annual rent? Back out my vacancy, back out my property taxes, back out my insurance, back out my property maintenance, back out my property management. What's my net operating income when I do that? And then what's my cap rate when I buy the property? And the big issue for investors right now is that the cap rates are not high enough relative to the interest rates. So you can see that very clearly on this graph. And for those of you wondering, like, when the demand's going to come back in, when's the demand going to come back in on the investor side, at least? Well, we're going to need to see the mortgage rates drop below the cap rate. So the current cap rate to buy a house in America is 4.9%. To buy a house and rent it out, it's 4.9. You get a 4.9% unlevered return. Now you can see for much of the previous decade, the cap rate was higher than the mortgage rate, meaning that you could buy a house, take out debt, and then you would profit, you would cash flow after you did that, aka it penciled out. when the blue line was above the orange line. But then something changed. Something changed in 2022. The mortgage rates went above the cap rates. And now the 30-year fixed mortgage rate 6.4, 6.3%. The cap rate's only 4.9%. So long as this situation persists with the mortgage rate above the cap rate, we are not going to see investors return to the market. And actually, folks, I want to just show you how much this times the exact crash in investor purchases. Take a look. The mortgage rate spiked above the cap rate by late 2022. When did the investor purchases start going down in a market like Tampa? Oh, it was late 2022. Exactly. It's like inversely related. The investor purchases versus the mortgage rates versus the cap rates is inversely related. And so what would cause cap rates to go up? Well, we need to see prices drop. We also need to see mortgage rates drop. Maybe rents go up, maybe they go down. We'll have to see what happens with rents. Now, we actually had a really good question here from Tater in the comments section here in the live stream. And if you guys, want to get involved in this live stream, please do. I'm going to talk about some of my forecasts in a second for different cities, different zip codes. But he says, Nick, if this is baseball, what inning are we? If this is baseball, what inning are we in the housing market downturn? And I actually, love baseball, everyone. I actually got my start with data and statistics looking at baseball statistics. A lot of you don't know this, but I'm a big baseball nerd, and I'm into Moneyball and sabermetrics and all that type of stuff. And I used to write for a baseball website like 6 or 7 years ago, and that helped me kind of hone my skills as far as like Tableau and all the data. Anyway, what inning are we in the housing market data or in the housing market downturn? I would say we're probably in the third inning. Third inning, maybe fourth inning in certain markets, but third or fourth inning. We're still not, I would say, close to the halfway point. The home prices are still so high. The affordability is still so bad. And the home buyer demand is so low that how could we be anywhere past the third inning, really, at this point? Maybe in Austin, Texas, you could say we're in the fourth or fifth inning. Maybe in Florida, you could say we're in the fourth inning. But on a national basis, it's still just way too expensive to buy a house. The investment numbers don't pencil, for an investor, and the affordability doesn't work for a home buyer, right? So, we're talking here about why investors can't make it work on this graph with mortgage rates and cap rates. What about the regular home buyer? Can the home buyer make it work? Well, no, because the home buyer looks at their mortgage payment relative to income, and they're paying 40% of their income on buying a house right now. That's the highest it's been. Not ever. Actually, the highest ever was 1981 when the Fed increased mortgage rates to 18%. It got to a 58% payment ratio. But we're at 40% today. That's higher than the last crash. Long-term average mortgage payment to income ratio is 30%. So if you guys are looking for a benchmark, like when is demand going to come back? If you're a realtor or a mortgage broker, when are buyers going to come back? Well, we're going to have to get closer to this level of the median mortgage payment to income being 30%. We're not even close yet at this point. So we have to see prices drop. We have to see mortgage rates drop. We have to see income go up. All right. What other comments do we got here? Let's see. What are you guys saying? What are you guys saying? So how about we actually take some, actually, no, this is a great comment. This is a great comment. What impact do you think $0 property taxes will have in Florida real estate? So this is one that a lot of people are talking about. Governor Ron DeSantis wants to eliminate property taxes in Florida. What's the situation on this? I think this is going to go up to a ballot initiative in 2026 in Florida. We'll have to see if this happens. I think it's reasonable to see property taxes get cut. If they're eliminated, you're leaving a gaping hole in local services with schools, fire, and police. I don't necessarily think that would be a great move for society. I actually think you would see some people move out. Because, younger families care about schools, they care about services. You cut taxes, you're basically, you eliminate property taxes, you're basically placating to the retirement community who lives in Florida. If DeSantis in Florida does this, you're tripling down on what Florida is, and that's a retirement destination. It's going to turn off a lot of younger people. It's going to turn off a lot of families. Maybe real estate investors would love it, although I don't think the real estate investors would qualify based on the current discussions. I believe it would be only homestead owners. Only homestead owners. All right. What are the comments we got here? Oh, great point. Just wait until we see the distressed real estate. So we have not seen that much distress yet in the housing market in terms of mortgage defaults, in terms of foreclosures. The foreclosure rate is still at a relatively low level, although it's rising. I was just on Zillow today. I was looking in Miami. I was finding foreclosures in Miami on Zillow. I'm about to show you one that I just found there. I think you're starting to see, some of the people who overextended themselves in 2021, 2022, maybe a lot of investors overextended themselves with bridge loans. They're starting to run out of time. They're starting to run out of capital. And we're starting to see the mortgage defaults tick up, the foreclosures tick up. I think the foreclosure starts are up by like 10% year over year. And I was actually just looking today on Zillow in Miami. I found this foreclosure. Take a look at this, everyone. $699,000. This looks like a flip. This was a flip. I mean, it looks decent on the inside. It's got the nice tile floors. Keep you cool in Miami during the summer. Take a look at the listing history on this, everyone. Just goes to show how crazy Florida's housing market is. They bought it for $666,000. I believe they flipped it and then listed it for sale at 1.4 million. 1.4 million. Now it's in foreclosure. 699,000. Just goes to show how fast things can change. And, no doubt this is an investor who bought this house, right? This is an investor who bought this house to flip it. Uh, they're in foreclosure right now. This is the type of thing we might see more of over the next 12 months. And you could tell it's in foreclosure, by the way, on Zillow. They have a designation that says if it's in foreclosure. Keep your eyes peeled in your market, everyone, when you look for houses on Zillow. Are we seeing those foreclosures play out? Are we seeing more distressed listings hit the market? And we're getting to the point now in the live stream, everyone, where I'm going to take your requests, but I wanted to show you a little bit more data on the investor purchases first, because I just want you to all firmly understand that this is the reality. This is the new reality. This is the data from Redfin. National investor purchases peaked in 2021, Q3. They're down 47% Q2. They're still going down year over year. So even with the more inventory, even with the prices dropping, the investor purchases are still going down. And the last time we saw this, right? 2005, 2006, 2007, right before the big bust, was when the investors got out of the market last time. So we have historical precedents for this, right? Historical precedents for the investors leaving the market, anticipating the decline. The math doesn't make sense. The investments don't pencil. The investors stop buying. Then in the last downturn, the crash played out shortly thereafter. But this effect, it's most acute in markets like Florida. I mean, look at Jacksonville. Oh my goodness. Huge drop in investor purchases. Look at Miami. Huge drop in investor purchases. Look at Las Vegas. Huge drop in investor purchases. Look at Nashville. Huge drop in investor purchases. Look at Charlotte. Insane drop in investor purchases. I mean, just look at that. I think the investor market share in Charlotte is now at the lowest level in 10 years, which is great news if you're a home buyer. Declining investment purchases are great news. So if you live in any of these markets where the investor purchases are going down, this is great news for you. What about Riverside, California? Ooh, well, the investor purchases went down. They're kind of going up. In some markets, folks, the investor purchases are going up. This was the actual other interesting thing about the Redfin article. Some markets have investor purchases going up. Anaheim, up 5% year over year. Where else? Los Angeles, up 7% year over year. Newark, New Jersey, up 11% year over year. Portland, Oregon, up 14% year over year. Seattle, Washington, up 51% year over year. Investor purchases in Seattle up 51%. Generally, what we're seeing is that the investors are, I'm not going to say they're flooding back into the market, but in a place like LA, you could see, yeah, the investor purchases are up the last couple of years. They're not quite at the peak of the pandemic, but there is a rebound. I think we're seeing more of a transition back to some of the legacy markets. Some of the investors who maybe left California for the Sun Belt during the pandemic, they're out of the Sun Belt, they're back in California. Another market, just real quick, I want to talk about is Cleveland on the investor purchases side. Cleveland now actually has more investor purchases than Nashville. So you can see Cleveland's investor purchases just continue to go up. They're only down a little bit from the peak. Cleveland is like the new hot investor market where a lot of investors are in. A lot of the bigger pockets investors like Cleveland, the cap rates there are higher. And you can see actually home values in Cleveland are still going up year over year. So in Cleveland, values are up 4.4% in the last 12 months. In Tampa, they're down 5.6%. So, that's a situation we're also seeing investors are starting to chase the appreciation, which is still present in the Midwest and Northeast. Home prices are still going up in the Midwest and Northeast. They're going down in these areas in blue. They're going down in Florida. They're going down in Texas. They're going down in Phoenix. So investors are reacting to that, and they're transitioning more to the Midwest as well as parts of Southern California. But now, everyone, let's do your requests. I have time for some requests here before I end the video. So let's get into them really, really quickly. What zip codes would you like me to see? All right. Charles says, can you analyze North Georgia, Fannin County? All right, North Georgia, Fannin County. Let's do it, everyone. Let's take a look. Fannin County in North Georgia. Is this close to the Tennessee border? Yeah, it is close to the Tennessee border. So let's see. What does the data look like in Fannin County? All right. Values are down 1.4% in the last year in Fannin County. Good news if you're a potential home buyer there. But we actually think they're going to drop even more in the future. We think they're going to drop 4.8% over the next 12 months at Reventure app due to our home price forecast score. So this is good news. If you are a buyer, Northern Georgia, there's more inventory on the market. There's more days on market. It's shifted more to a buyer's market. Prices are already dropping here. They're going to drop by more in the future, according to Reventure's estimates. All right. What about 78701, everyone. 78701. I actually happen to know where that zip code is off the top of my head because I used to live pretty close to there. 78701 is in Austin, Texas, and it's in downtown Austin, Texas. We're going to see a big decline here, folks. 5.5% drop the last year in downtown Austin. So for those of you who don't know, Austin's housing market is down 23%. Austin's housing market is down 23% from peak already. So Austin's like in a full-fledged crash. 78701 is down 23% in that span. So we've already seen, it went from 900,000. There's a lot of condos down here. 900,000 to 688,000. Would you guys want to buy a condo in Austin? You can let me know. But what's our price forecast here? We think prices are going to drop another 8.3%. Wow. So that's going to bring the correction to over 30% here in downtown Austin. If that forecast comes to fruition, the Reventure app price forecast performed very well, folks, over the last year. Our forecast is 6 times better than Zillow so far in 2025. If you guys are looking for an accurate price forecast for your area, you want to understand where values are heading, go to www.reventure.app at the end of this video, upgrade to our premium plan so you could see that price forecast in action. It can help you save a lot of money. The premium plan is $49 a month, but it could save you $49,000. Great ROI on that. What about, okay, we got a super chat here, 95687 Bay Area. I love that we got a Bay Area request, 95687. Vacaville? Is it Vacaville? Vacaville? Please don't butcher me on the pronunciation. 95687. So prices have dropped 1.5% over the last year. And just so all you guys know, this is north of East Bay. So this is what, Vallejo, Fairfield, California. Prices have dropped 1.5% over the last year already. They're down since the middle of 2022, 5.8%. We think they're going to go down another 5.7% on our price forecast. So there's been like a mini correction here. The good news is shifting more and more to a buyer's market. There's more and more inventory. So when you look at this home price forecast graph, the more the score gets to be closer to zero, the more of a buyer's market is, the more we think prices are going to drop in the future. All right, got time for a couple more requests. What about, okay, we got they're coming in hot and heavy right now, but I'm gonna flip it up here. We're gonna go actually into Newport Beach, California, 92660. 92660. This is like one of the wealthiest zip codes in America. What's happening in one of the wealthiest zip codes in America, everyone, right now, do you think? Newport Beach, California, 92660. I guess this isn't quite in the area of Newport Beach, I thought. No, this actually might be the wealthiest zip code in America. Typical home value of $3 million. Wow. What's the median list price? $4.7 million. It's up there. There's a zip code here to the east where the median list price is 9 million. So this is like a completely different market, everyone. What does the forecast say in this market? Well, values in the last year are up 4.8% in this zip code. A lot of wealthy people still buying houses, or maybe even a lot of them in cash in Newport Beach. Where do we think values are heading in the future? We think they're going to actually be somewhat stable. We think they're going to go up 2.7% over the next 12 months. So just for those of you know, our forecast and reventure app, it's positive in quite a few areas in America. It's not only negative. We have a plus 2.7% forecast here in Newport Beach. The reason is inventory is still holding on. Inventory is still low. The buyer demand is still decent relative to the inventory. You could see we're still about 50% below 2019 inventory, which is influencing that higher forecast in Newport Beach. All right. What else do we got here? 43701. Another super chat, 43701. And if you guys want to do this yourself, you can, folks. Go to www.reventure.app right now, and you can access all this data for yourself. Upgrade to our premium plan so you can see our price forecast. We're looking here in Zanesville, Ohio. Now, I'm going to guess most of you don't know where Zanesville, Ohio is. I happen to actually know where it is because I used to live in Columbus, and I actually went on a hike near Zanesville about 5 or 6 years ago. What are prices doing in Zanesville? Well, they're up 2.7% over the last year. Actually, prices here are very cheap, everyone. The typical value is $200,000. $200,000 for a house in Zanesville, Ohio. This is rural, central to eastern Ohio. Where are prices going the next year here? We think they're going to be literally flat, 0.1%. We don't really see this market moving much up or down. It was a seller's market last year. It's now flipped into being, I'm going to call it stable, trending on a buyer's market. If we were to see more inventory, more DOM, it could flip to a buyer's market in Zanesville. Right now, we're flat. I got time for 2 more requests, everyone. Let's take 2 more requests. Oh, now this is an interesting one. Game12306 says, can you confirm upstate New York is the best market opportunity right now? Schenectady, New York. We also have David asking about Dutchess County, New York. I got to talk about New York a little bit, everyone. What a lot of people don't know is that New York is one of the strongest housing markets in America right now. So if we look at the states with the best appreciation over the last year, what do you see? New York, number 3, 4.4% appreciation. Can we zoom in on this just so you guys can see that a little better? Number 1 is Wyoming, 5.2% over the last 12 months. Number 2 is Kentucky. Number 3 is New York. Number 4 is New Jersey. Number 5 is Connecticut. Number 6, North Dakota. Number 7 is Rhode Island. Who here thought those would be the top 7 states for appreciation a year ago? We at Reventure App did. That's what the data was telling us. New York still has a big issue with inventory. There's still an inventory shortage, and there's now people like migrating to upstate New York for climate reasons. As some of you know, I am originally from upstate New York. I still go there over the summer. People tell me they move there now because they view it as a climate safe haven. And this is something that's legitimately actually propelling homebuyer demand in this market. Albany, Schenectady, Troy is up 3.6% over the last year. Hudson's up 2.6%. Poughkeepsie is up 3.8%. That includes Dutchess County. So we still have decent appreciation in upstate New York. What's our price forecast? Oh boy, folks. In Albany, we think prices are going to go up 6%. We think prices in Poughkeepsie are going to go up 4.9%. There's still a massive inventory shortage. I don't know if how many people understand this. If you were to go to Poughkeepsie, this is the inventory graph for Poughkeepsie. We had 3,800 homes for sale before the pandemic. We only have 1,700 homes for sale today. Still a massive inventory shortage. So we still think prices are going to go up. All right, time for 1 more request. How about, all right. We got final request here, DC 20155. As many of you know, Washington, D.C. is a market that's not doing so great. There's a lot of job losses, and I guess this is in Virginia, the zip code that I was just given. But I actually just want to show you guys what's going on in D.C. because I think a lot of you might be interested to know what's going on in D.C. Home values in the District of Columbia, the district, are down 3.8% over the last year already. Home values in Arlington, though, are up 1.2%. Home values in Fairfax are up 1.3%. So there's still some stability out here in the outer suburbs, but DC is getting hit very hard. The inventory in the District of Columbia I mean, it's just, look at this graph. 2,800 homes for sale in the District of Columbia. The long-term average is 1,800. So when you see that inventory, and again, to go back to one of the initial questions about like, how could home prices drop if inflation is so high? Folks, look at the data for your market. If you live in DC right now and inventory is going through the roof, it's suggesting prices are going to continue to drop. We have a minus 7% 12-month forecast in DC. Minus 7% 12-month forecast in DC. But let's just get to that zip code, 20155. But as you can see, everyone, not all areas in the same metro are the same. 20155. Gainesville, Virginia. Where is this even? This is like somewhere out in Virginia. Gainesville, Virginia. I guess it's west of... What county is this in? Hold on. I want to just orient myself here. This is in Prince William County, Virginia. All right. 20155. Prices are up 2.5% over the last year. And this is kind of how you should conduct this analysis, everyone. How much have the prices gone up or down over the last year? Get that in your head. And then what's the 12-month forecast? Well, we think in this zip code, the 12-month forecast is still positive 3.8%. So this is another area where we think prices are going to hold stable and are actually going to continue going up. Now, this market has softened a bit. It was more of a seller's market last year, but it's still a big seller's market. It's still kind of a seller's market this year. The reason is inventory here in Prince William County, Virginia. Oh man, 62 homes on the market. We had 130 homes prior to the pandemic. So that's explaining that situation. Folks, I got to wrap up soon. It's getting dark outside. I got to get home. But before I do, I just want to show you all some data on the reventure price forecast. I know some of you ask, like, this forecast you came up with, like, is it reliable? Can I trust it? How does it compare to other forecasts? Well, I just want to take 2 minutes to show you. We ran the data on our price forecast. And folks, from 2024 to 2025, we have a 73% correlation coefficient in terms of predicting prices, what we predicted last year to what's happening this year. And that's really strong. You can basically see in the markets that are going down the most this year, we had a negative forecast last year. In the markets that are going up the most this year, we had a positive forecast last year. And this forecast, everyone, we compared it to Zillow. Zillow's on the left, we're on the right. Our forecast so far in 2025 is more than 6 times better than Zillow's forecast in predicting prices. And it's because we look at the underlying data in the market. We look at the inventory, we look at the DOM, we look at the price cut trends, and we make that data available to you guys as home buyers and investors so you can make more educated decisions. So right now, everyone, go to www.reventure.app. Type in your city or zip code and unlock that forecast for your area. The cost of doing that is only $49 a month. $49 a month. Now, I know some of you say, oh, that's expensive. Folks, that's 0.01% of the cost of buying a house. And we've had users now use this forecast and save $50,000 on their home purchase. They avoid buying in areas that are going down, or they buy in areas that are going down. They use the forecast to actually negotiate cheaper prices. We also just added our long-term growth score to the suite of data points. If you want to see how markets are going to do in the long term, access that long-term growth score, www.reventure.app, sign up for that premium plan, and I will be back with you guys soon. Remember, investors, they're no longer buying homes. The purchases are down 70%. We at Reventure think that's going to mean prices will continue to drop in a lot of the markets where investors are most